Hi, and welcome back to CPE's Investment Matters. I'm Paul Rosta. Over the past 5 years, it's been a real rocket ship ride in the US for Mapletree Investments. That's the apt description of Rich Prokup, who leads US operations for the Singapore-based firm and is my guest today. Under Prokup's leadership, Mapletree has become one of the industrial sector's fastest growing, most active investors and developers. In just a few short years, the company has created a U.S. footprint that now encompasses 5 offices, 150 team members, and a development pipeline of about 500 million square feet. In this conversation, Prokup tells why the company is focusing on development in 2026 and what will be driving leasing demand this year. He outlines the biggest challenges that owners and their clients will face, and he's got sound advice for young people who are considering a career in commercial real estate. And if you've got a lot of long distance business travel ahead of you this year, you'll appreciate his tips for keeping jet lag at bay. Rich would know he makes regular trips from his office in Chicago to corporate headquarters in Singapore. Take a listen. Rich Prokup, welcome to Investment Matters. Really nice to have you with us today.
Thank you so much, Paul. It's an honor to be on, and I'm really excited to talk to you a little bit.
Well, appreciate the time. And let's start off by hearing just a little bit about how you got started in the business initially. Were you already interested in real estate investment as an undergrad or in graduate school? Did your interest evolve over time? What was it that made you initially think, hey, I'd like to take this road?
Yeah, that's a good question. So, I've been in the business probably for more years than I care to admit. And back then, when I entered the business, things were a little different. They didn't necessarily have the defined real estate programs that exist today. So I got a Bachelor of Fine Arts, actually an emphasis in commercial music, and went on and got my MBA. And then, I took some real estate courses as part of that MBA, and it immediately caught my interest because, above all else, real estate is a very creative business. And, you're not spending time focusing on how to save a half a penny on 10 million widgets. Every single property is different. Non-homogeneity is literally part of the definition of real estate. And that makes it incredibly exciting. And it really is what appealed to the creative side of me. And what I find in real estate is that it tends to attract very creative people for that same reason. Every day you wake up is different. So that's what brought me into it initially. But when I graduated from college, it wasn't a situation where I had a real estate degree. I had a good, solid finance MBA, interviewed with a lot of companies, but I was picked up by a family office called M&J Wilco. And that was run by Mark Wilco and David Harvey, who were my first two mentors and, taught me everything that I know about real estate. And what was nice about that family office is that because it's a small group, you have to do everything. You're not working for a major institution where you're doing just acquisitions or just development. Over the course of my first 8 years in real estate, I did acquisitions, dispositions, asset management. I ran the insurance department at one point. I oversaw contesting real estate taxes. You name it. Every component of real estate I touched over that first 8 years. And it just gave me a really well-rounded sort of background and really set me up for the rest of my career because at that point I could really pivot. I knew a little bit about almost everything. And that's been really sort of the defining characteristic of my career ever since.
So now, in your role as a CEO at Mapletree, um, of course, Mapletree is part of a global investment organization. And as we were making the arrangements for our conversation today, I heard a couple of times that you were over at headquarters in Singapore. Would you mind telling us how often you have to make that trip and what your strategy is for dealing with regular jet lag?
Okay, yeah, well, sure. I go to Singapore about 6 times a year for various board meetings and other investor meetings. And, first I got to say, if you're going to go to a country 6 times a year, Singapore is a great choice. It's an incredibly
Okay.
beautiful city and country, pretty small. The whole country is smaller than Chicago, but it is very clean, very safe, and the food there is fantastic. So it's a great place to go. So, but it's a very long trip. It takes me about 24 hours to get to Singapore, and because there's no direct flight. So it's a layover typically either in the Middle East or in Asia. So my strategy is well mapped out. So I have a lot of advice in this area. But the strategy is, first of all, on the way over there, don't worry too much about timing. People spend a lot of time saying, well, what time is it in Singapore and when should I sleep? Don't worry about any of that. There's 2 legs of the trip. Try to get 3 hours of sleep on each leg. So over the course of 24 hours, you get 6 to 8 hours of sleep, and then you're good. And then the second is, once you hit the ground, you can't go to sleep until 10 o'clock. So I have all these things that I usually get there on a Sunday. So I do work, I walk, I iron my shirts, I do anything I can to keep myself awake till 10 o'clock. And if you can do that, usually you're okay. But if you land and fall asleep at 1 o'clock in the afternoon or at 6 o'clock, you're toast for the entire trip.
Well, it sounds like you've got a pretty good strategy worked out based on your experience. So, although I have to say it gives me jet lag just hearing about all of that 24-hour trip from
Well, it's funny, not to
bed.
interrupt you, Hall, but it's actually not that bad because, okay, on the way there, I'm preparing for whatever meeting, but on the way home, I have 24 hours where people pretty much leave me alone. And the way life is today with social media and phones and so on and so forth, how often are you able to really unplug for a whole day?
Well, Mapletree has become a prominent player in U.S. logistics real estate in the last few years, of course. And could you walk us through how that's unfolded, some of the highlights, just how that has evolved in recent years?
Yeah, I'd be happy to. So, first of all, for anybody who's listening who may not be familiar with Mapletree, as I mentioned, we're a Singaporean-based company, and we are a subsidiary of a company called Temasek. So, when Singapore was formed, 60 years ago, they controlled a bunch of companies. They bundled those companies together and contributed them to Temasek, and Temasek is basically the holding company. So, we're a 100% owned subsidiary of Temasek. So, we're not the sovereign wealth fund. That's GIC. But we essentially are all, government workers, is my joke. So Mapletree is 60 billion AUM across the globe in 13 different countries. But here in the US, they were relatively unheard of. So in 2018, we had some small holdings, but not much in the way of scale. And in 2018, we came in with a storm. And within the first year, we bought 40 million square feet of industrial product. We also bought data centers, student housing, and office. I came on in early 2019 to establish the platform, and then we've built it up since then. So we've gone from virtually nothing in 18, established 5 offices across the country, put together a platform, and then in 2021, we went on another buying spree where we went out and spent $5 billion. So we bought another 30 million square feet of industrial properties, for some more data centers and more student housing, more office. So right now we're at about 15.5 billion in AUM in the US. We're now the largest business unit in Mapletree, up from virtually nothing just 5 or 6 years ago. And we have 150 people across the country in 5 offices. So it's just been an absolute rocket ship of a ride over the last 5 years. Never a dull moment. And now we're branching into development, and we can talk about that some more later if you'd like, but we have a tremendous focus on development right now.
Well, that certainly is quite a growth trajectory. And let's drill down into the market conditions that we're seeing today. A few months ago, when CPE reported on a couple of major new developments that you're undertaking in the Chicago metro area, you told our reporter that there had been a national shortage of spec development at that point for 9 consecutive quarters. What's behind the national shortage in spec development, and what does it tell us about opportunities today and going forward?
Yeah, so to answer that question, you have to go back in time a little bit. So during COVID, I think everybody's aware, industrial real estate just went off the charts, record-setting statistics in every, vacancy, rental rate growth, you name it. So one of the record-setting statistics that took place during COVID was development. Things went absolutely mad. People were putting buildings up left and right. And we had a pipeline. So a typical pipeline in the U.S. would be 250 to 300 million built every year in industrial across the country. That pipeline got up to 700 to 800 million, depending on whose report you read. So it was 2.5, 3 times what would normally be anticipated as a healthy market. We were right on the verge of going over the cliff. And then what happened is that interest rates went up and demand went down. And when that happened, speculative construction ended almost overnight. The merchant developers couldn't get a capital stack to break ground on a new product, and the institutions were disciplined enough to stop. So what's happened now, we've gone about 2.5 years where we've averaged less than 50 million square feet of construction starts each quarter. And on top of that, the amount of that construction starts, the amount of that that's pre-leased has increased. So now if you look at the pipeline, it's about 35 to 40% pre-leased. So if you project forward for the next couple of years, we're looking at delivering between 150 and 200 million square feet of speculative construction. That's just not enough to support what's becoming once again, becoming a very robust leasing market in the U.S. And so we're going to see, in my opinion, and this, speaks to our strategy, we think there's going to be a shortage of Class A product in the market starting later next year and into 27 and 28. And even as of today, we really haven't seen the developers step up and start, developing in scale. Now that's likely to happen, in my opinion, next year, but it hasn't happened yet.
Well, how does that all figure into Mapletree's strategy as far as your development initiative? What kinds of space are you looking at that you feel is in demand? Are there any particular regions that are on the radar right now?
Yeah. So development is our main focus right now. So we'll probably be back out buying product again later this year. But as far as new acquisitions go, for the last 12 to 18 months, we've been focused on development. And we're a big developer. We have billions under construction globally at any moment in time. But here in the U.S., we had never really developed anything. We had grown mostly through acquisitions. So about 1.5 years ago, we created a development team led by Chiasso, who brought over from Prologis, and we've now developed a pipeline about $500 million worth of development product across the country, and that is still ongoing. So we're hoping that $500 million grows to be $1 billion, and that we can be a top 10 developer over the next few years. And when it comes to market, I mean, it's the good and bad, because there aren't as many players out there looking for land right now. You can get some pretty good deals. Some of the larger institutions or the big merchant developers who historically would have been at the table pushing pricing up, they're not there. So we're definitely one of the bigger players when we sit down and start bidding on land, and prices are better than they were a few years ago. But you have to be careful about which market you go into, because certain markets like Memphis, for example, saw a lot of overbuilding, and so you have to be careful. But markets like Chicago, for example, where we're very bullish on, Chicago never really became overdeveloped, and there's not much Class A space under development right now here. And the same is true in the Northeast. Saw a lot of development, but it's still a very robust market where we're seeing a lot of leasing activity. So selectively, if you pick the right submarkets in the Northeast, we think that's great as well. And same with Dallas, Houston. A few of these other markets have remained very healthy. So you have to be much more cognizant of where you're developing and what you're developing, because during the pandemic, you could put a building up on almost any corner and somebody's going to come along and lease it. That's not going to happen now. So you really, really have to have micro knowledge, not just about the market you're in, not just about the submarket, but what street are you on and how close are you to the highway? And all these fundamentals that we learned over the last few decades are very, very important right now.
Well, as you look at the logistics landscape today, is there anything new in what your tenant customers are looking for today than, say, a couple of years ago or even pre-COVID? And for example, how about the qualities that they are looking for, not only in location, but in the facilities themselves, in the size, the features, amenities, all that sort of thing?
Yeah, I would say there's one thing that stands out in my mind. So the buildings themselves have been relatively stable over the last 5 years. The clear heights keep getting higher, but a lot of dock doors, a lot of parking, so on and so forth. That really hasn't changed. The thing that has changed or continues to evolve is power. And and that's for a couple of reasons. One is that manufacturing is a very big thing right now. If you look, and I'm not going to get political, but when you look at the landscape that we're in right now, there's a tremendous pressure to onshore manufacturing, and we're seeing that. Typically people think of real estate as a lagging indicator, but when it comes to this, we're a leading indicator, and we are seeing more manufacturing activity on the leasing side than I've certainly ever seen in my career. Leasing, we're looking at doing 50 million square. We did 50 million square feet of leasing and manufacturing nationally through the third quarter, and it'd be even higher by the end of this year, right? And that's double what it was in the previous year. And we're seeing this in our portfolio as well. And I can give you some real examples of tenants who are taking operations from other countries, bringing them into the U.S. Now, the one thing that these manufacturers all have in common is the need for power. So, for example, we have a manufacturer who is making servers. They're going to put up to 100 megawatts of power into our facility. I mean, that's just unheard of for for an industrial facility. But power is very hard to get a hold of right now. But the advantage in our buildings is that we're not data centers, right? We don't have a building full of a bunch of blinking lights. We have actual people in our buildings doing work. So when we go to the municipalities and say we need, take your pick, 25 megawatts, whatever it is, the first question out of their mouth is, how many people are you going to employ? And like the example of the lease we just signed earlier, this quarter, they're going to bring 750 jobs to this particular market. And so it's easy to get the attention of municipalities. But that's the one thing, and it's not just for manufacturing, but it's also the use of AI, right? Because now picking and packing operations are becoming more and more sophisticated. So when we develop buildings, we're putting in twice as much power today that we would have 10 years ago. And frankly, we're going to the municipalities and saying, how do we get more? That's, I think, the biggest change.
Well, when you think about the next, say, 12 to 18 months, what are the trends in the industrial real estate market, the general economy, or both that are most encouraging to you?
Yeah, so I mean, I just talked about manufacturing, so I'm not going to repeat that, but that's clearly a very, very big trend. And I think that's going to drive leasing activity over the next couple of years. But, I think that there's a phrase actually that I've used that I'll continue to use that I think really defines what I think 2026 is all about. And the phrase is pent up, right? Pent up demand. And I think that applies to a lot of different sectors. So if you look at leasing, leasing was, as we all know, just incredibly robust during the pandemic. Then it dropped off very significantly. There's been very little leasing that's been done over the last couple of years, especially in large spaces north of 500,000 square feet. Mm-hmm. Those tenants have sat on the side. Part of it was just them simply waiting out the economy. Sometimes they took more than they needed during the pandemic, but they haven't leased much. There's a pent-up demand there, and it started to unveil itself. So even this quarter, we're seeing a tremendous number of large users that are back out in the market, and these big buildings within our portfolio, we've leased up several buildings, half a dozen buildings in excess of 500,000 square feet, really in just the last 6 months. And if you look nationally, these million square foot buildings are disappearing one after another. So there's a huge pent up demand on the tenant side, which I think is going to come to play in the coming year. And then when you shift over to capital markets, you have pent up on both sides. So you have investors who have raised a lot of money over the last couple of years who haven't been able to place it. And we were starting to see that come out about a year ago. We saw a lot of activity in the market, people coming to try and buy assets and portfolios. And then the tariffs hit and everybody pushed pause because nobody knew what that meant. So a lot that we thought was going to get done early in the year didn't get done. Now everybody's coming back to life again. It looks like the economy is going to hold up. People are starting to get a sense of pricing. All that money is sitting on the sidelines, ready to be invested. And then on the flip side of that, you have groups like Mapletree who have purchased, everything that we own on the industrial side is held in two closed-end funds that have to be monetized over the next few years. There's a lot of people out there like us. So again, pent-up need. We have a pent-up need to sell. These other funds have a pent-up need to buy. All of that has to start transacting, in my opinion, in 2026. So I think we're going to see more activity on the leasing side, more activity on the capital market side than we've seen in several years.
Well, that sounds like a very promising and upbeat outlook, Rich. And I'd also like to ask you, though, about potential challenges out there. What's on your radar in terms of the possible headwinds for the sector? And feel free to address not only your tenant customers, but those participants in the sector itself, your fellow investor developers. What's on your radar in terms of challenges?
Well, the first one that pops to mind, and I'm sure everybody would say, is interest rates. Interest rates are still, while they're not bad by historical measures, they're still a lot higher than they used to be. And that's a challenge to people who are selling and buying. And for a long time, interest rates, there was negative leverage. So interest rates were higher than cap rates. So you had to basically buy into a portfolio hoping you would get those rental reversions that would get you in a positive cash flow situation in a couple of years. Now, interest rates have come down a little bit, but they're still high on a relative basis. And maybe leverage is break even at this point. But the one thing that I think would be problematic is if we don't see those interest rates start to come down. Right now, spreads are very good. Spreads are sub 150 for quality product. But the underlying, benchmark is still higher than we'd like it to be. If that comes down, I think that's going to be very, very critical to the market. And then the other challenge is just simply we're in a very strange time politically, right? Both in the U.S. with the political environment here, but also with the wars that are raging. It's hard to predict what's going to happen on a global scale right now because things are just so up in the air. So, the one thing that I think everybody worries about, and they worried about last year, is what don't we know? What is going to happen tomorrow that we don't, that we can't expect? The key word last year was uncertainty. The word out of everybody's mouth was uncertainty, uncertainty, uncertainty. And I think that's gotten a lot better, but it hasn't gone away.
With all of this in mind, with the industry conditions and the opportunities and challenges, how would you sort of characterize the way that Mapletree will be approaching market opportunities again for the next year or so? And anything that you would say to just kind of sum things up as far as your strategy?
Yeah. So I touched on that a little bit. So, we're going to be very bullish on development. I won't repeat everything I just said, but we believe this is going to be a great market to develop. So we're going to build up that pipeline and probably launch a development fund over the next 12 months. The second I touched on as well, which is divestment. We have two funds. Our first fund especially, saw a huge increase in values during COVID. So we're starting to monetize that, and we're giving some very, very generous returns back to our investors, all double-digit returns. So we're trying to put some money back in our investors' pockets so that we can turn around and redeploy later in the year. So it's my opinion that within the next 6 to 12 months, we'll see interest rates come down a little bit, and the market's going to be very, very strong for new acquisitions. So if you look forward, we're a good Asian company. We operate under 5-year plans, and our 5-year plan is development, monetization of the existing funds, and then aggressively acquiring portfolios again as interest rates come down. So we're going to see all of that take place over the next 12 months. And we're also in conversations with people about, trying to raise new, fresh capital to do continuation vehicles and new funds.
Well, I'd like to change gears if we could and talk just a little bit more about your own professional journey. For example, are there any challenges, milestones, turning points, mentors that have made a difference? You touched on this briefly at the beginning of our conversation. Anything else, though, that you would like to bring up as far as important milestones in your own professional journey?
Yeah, I think a couple of things I would say. First of all, when it comes to mentors, I mentioned, Mark and David, who are just wonderful guys. But the truth is, I view everybody as my mentor. And, you can learn something from everybody. So whether it's our CEO, Mr. Hugh, who is really a visionary man. He's kind of the Sam Zell of our company, one of the smartest guys I've ever met, to the interns who work over the summer. We learn something from everybody. And if you don't have that point of view, then you'll never succeed. But as far as I'd say, one of the biggest pivots in my career really was this job, because I've been an operator my whole life. I tend to get my fingernails dirty, right? I'm out there walking the assets, meeting the tenants, spending time with the brokers. I always say that there are only three important things we do in this business, and that's talk to tenants, talk to brokers, and tour properties. And I guess the fourth one is talk to investors. Other than that, it's all just administrative work. And the one thing that changed when I came here, I was with First Industrial for about 14 years, which is a great organization that basically ran like a top. And when I came over to Mapletree, though, it was the first time I really was able to operate on a global platform. And what's really great about working for a Singaporean company is that English is their native language. So you can go to Singapore. I speak only one language, unfortunately. You go to Singapore and you hear updates from China and Vietnam and Europe, and you get this global perspective, and everything's in English. So it's not like you're working for a Korean company, which there are some great Korean companies out there, where I'm either having to learn Korean or working through an interpreter. So it's really been just a phenomenal opportunity for me to kind of learn this global market, and also to take everything that I've learned over the last 30 years and apply it to create a platform that hopefully will last for decades. And when I retire, I'll be able to look back and say, this is a platform that I helped put together.
Well, for those in our audience who may still be in school or could be earlier in their careers or just looking at taking a new direction in their real estate careers, what kind of skills or qualities would you say that you and your peers, that investor developers are looking for today? Are there any particular skills, qualities that you need more of? What would be some tips that you could share?
Yeah, this is really important to me, and I spend a lot of time trying to work with people who are either in college or just out of college. So I mentioned the interns before. Like a lot of companies, we hire interns, and I really go out of my way, especially for the ones based here in Chicago, to spend time with them. We also bring in people from schools to talk to them. We just had a couple of dozen kids come in from UIC, University of Illinois, Chicago. It's really probably the funnest thing I do here is try and work with and mentor the younger ones. And what I tell them is that things have changed from when I was starting. When I was starting, as I just mentioned at the beginning, you got a degree and then you went out and you got a job and then you grew from there. Now people are very specialized. And when people come in to interview with us, they either have a real estate major or a real estate minor or have taken a bunch of real estate classes, one of those three, but they know Argus already. They have done internships. They were part of their real estate club. They walk in with a very, very sound working knowledge of real estate before they even get out of school. And if you're not doing that, and this is true for a lot of aspects with my kids as well, that if you don't decide what you're going to do early on in college and prepare yourself for it, then you're going to be behind everybody else. So if real estate is an incredible career, and I encourage everybody to get into it. But if you want to get into it, do it while you're in school, because if you wait till you graduate, you're probably too late.
Well, Rich, now we come to one of my favorite segments of the Investment Matters podcast, which we like to call Executives Off the Clock. Though it sometimes seems like we all try to work 24/7, the reality is that nobody can be on duty all the time. So could I ask, when you do have a chance to take a breather, when you're not on a plane someplace, is there anything that you like to do for just a change of pace?
Yeah, so I'll answer that question, but when you talk about working 24/7, that definitely comes into play when you're working with an Asian company, because, I work from, whatever, 9 to 6 or 8 to 6 or whatever it is, go home, eat dinner, and then Singapore wakes up. So then my second day starts and I'm on calls in the evening. So 24/7 is a bit of an exaggeration, but not much. But yeah, you're right. Yeah, we all have fun time. So I think I mentioned earlier that my undergraduate was in commercial music, so I'm very much a very big music guy. I don't claim to have a tremendous amount of talent, but I played several instruments over the years. Right now, I play electric guitar, so I spend time playing music. I also have a hobby that I build guitar amplifiers. So anybody who's into guitars knows that the best guitar amplifiers that were built back in the 50s and 60s. So I actually go and replicate those amplifiers. So that's part of my hobby. And then the other one, as odd as it may seem, with all the travel that I do, is I love to travel. So in addition to my Singapore trips, I usually do 3 or 4 international trips at a personal level with my wife and with my family. Love to travel.
Do you have any all-time favorite destinations that you've been to, or that you would like to get to someday?
Well, I mean, my comment when somebody asks me that question is, so my favorite destination is the one I've never been to before. So and that sounds like a bit of a cliche, but it's absolutely true. There's just an excitement about going to a city you've never visited. And so that for me this year was Japan. So my family and I flew to Japan. We went to Tokyo and Osaka and Kyoto, and it was just a fantastic experience. And the Japanese people are just the most polite and friendly people you'll ever meet in your life, and just a very clean, safe environment. So encourage everybody to go to Japan.
And as for some of your creative pursuits, on the musical side, as a guitarist, are there any particular categories of music that you like to when you can pick up the guitar and play a little bit, or any favorite
Yeah, I'm an electric
artists?
guitar player, and again, I'm not, nobody's going to sign me up to become the next Stevie Ray Vaughan, but I do enjoy it, and I play with my friends, and so it's mainly classic rock and blues.
Hmm. All very worthy selections, always. Well, that's great. Nice to have that outlet. Well, Rich, I really appreciate you taking the time to walk us through your own career journey and how you view the market and what's happening in your shop. Nice talking with you, and thanks for spending the time today.
I really appreciate you reaching out to me. It's been a great experience for me, and I look forward. I listen to your podcast, and I look forward to hearing more in the future.
Great. Well, thanks very much. Much appreciated.
Thank you.
That was my conversation with Mapletree Investments Rich Prokup. Be sure to follow us on Spotify, Apple Podcasts, and YouTube. You can find archived episodes of Investment Matters and more CPE podcasts on our website, commercialsearch.com. Until next time, thanks for listening and be well.